Morning, everybody. How are you doing? Good morning, Danny. Was check. Soul Trader, Barry, Peter, FTNet, Paul, Dennis, Virginia, Gregors. I can read. How are you doing? Happy Friday. It's Friday. Yes. Finally. So today we are going to go through what happened yesterday, and we're going to look at what's coming up today with news. I wanted to cover currency correlation this morning. A couple of people have asked about it in the last few sort of weeks, really. Well, a couple of you have asked me questions about it in the last few weeks, which I've answered. But I thought it'd be good to go through currency correlation. And obviously, currency correlation affects exposure. So with what's happened with these squeezes that we've had in the last month, it's important to understand currency correlation now more than ever, obviously, because we've had some big moves which have been painful. So, morning, Ismet. Morning, David. What are you doing here? Isn't it not really, really late at night in America? Thank you very much for the $10. It's Friday, which means I get to pretend to be a productive adult for the rest of the day. Excellent. Thank you very much, David. Much appreciated. What do you mean you pretend to be a productive adult for the rest of the day? What happens on a Friday? 4 a.m. is it? Blimey. Are you up because you've been out all night and you've been drinking, or why are you up at 4 o'clock in the morning? I wouldn't be up at 4 o'clock in the morning, put it that way. Productive adult. You shouldn't pretend. You should be a productive adult. Right, so let's have a look at what's going on in the FX markets. In the indices this morning. Sorry, where are we? What have we got this morning? Hedge on the DAX this morning. FTSE's broken short, not convincingly either. Bit of a whippy open this morning. We'll see where those go. So have a look at those in a bit. DAX yesterday, huge move on the DAX yesterday. Didn't quite manage to get out the DAX yesterday. Had an aggressive exit here. And it pushed down into weekly support and then just flip-flopped around. There was an exit there where it wasn't an exit. It was still about a £50 loss. So ended up on a loss on the DAX yesterday. But yeah, huge sell-off on the DAX yesterday. Very, very fast. Obviously, ORB cleaned up on that. If you traded ORB yesterday, I did just over 2K on that yesterday. So yeah, very, very, very nice day yesterday. Yeah, good average week at the minute. But yeah, pretty good. So we'll see where those go in a minute. So news today. Morning, it's time. I was about to sleep when I got a notification that the stream was about to begin. Excellent. Well, David, you'll be pleased to hear that I will probably send you off to sleep because I waffle. Anyway, so today's news, we've got core retail sales for the CAD at 12:30, an hour before market open. I just want to double check when the clocks change in America. I think it's next weekend, isn't it? Yes. So we, that here. So we change, so it all goes back to normal, 2:30. Just scrap this time shifting thing. It's like, why? So that's today's news. That's all we've got today. So potential movement on the Canadian dollar this afternoon. It was a manic day yesterday. Morning, Pot DJ. Aussie dollar unemployment rate we covered yesterday morning in the members stream. 4.1 as expected, not a lot of movement off of that. Claimant count change for the pound, didn't really do an awful lot either. The Swiss obviously reduced their interest rates, so there was a lot of movement yesterday on the Swiss franc. If you have a look, we had a big spike up there on the pound, Swiss, Euro, Swiss, big spike up, not massive, but so obviously there was movement, but the market was expecting the drop. We got the drop, so pretty much business as usual there. That will potentially weaken the Swiss moving forward. So they've also indicated they are not interested, but they are not averse to negative interest rates. They also came out yesterday. If I get back to the Swiss press conference yesterday, there was a lot of news yesterday, saying basically that it's uncertain, the outlook for Switzerland, which is why they would be happy to use negative interest rates. They have the power to use negative interest rates and just basically sort their inflation and everything out very, very easily in Switzerland. There was also talk about intervention in here as well. There we go. I can never say this bloke's name. Schlegel. Sounds like Smeagol, but it's Schlegel. We won't hesitate to use FX intervention. So, like Japan, when you have interest rates that are virtually zero or negative, intervention is very easy because all of your you can print money very, very easily. But obviously, there's also a lot of overseas investment, typically in bonds and things, so they can liquidate overseas assets very, very quickly to turn it into, in this case, Swiss franc, which is what the Japanese did. They liquidated their US bonds to drive the yen intervention. The Swiss can do the same. So basically, they're just sort of saying, just bear in mind, we will move what we want to move when we want to move it. So lots of volatility potentially on the Swissy. The pound rates stayed the same. There was more votes to stay the same than expected. So that is slightly bullish for the pound, meaning that the interest rates are likely to drop at a slower rate, which is slightly bullish for the pound. So if we look at the pound pairs yesterday, we had a big positive move. It has undone half that move on the Australian dollar today. Negative move on the pound against the CAD, pound Swiss. Yeah, so it's goodish news for the pound, but still not anything particularly exciting. So all over the place, basically. Pound US, I've still got shorts on the pound US on here, which I'm holding, because this is potentially starting this retracement down to get hopefully out of all of this lot. I closed out Euro US dollar yesterday. Did I post that? I'm pretty sure I did. Yes. Yeah, so I posted that in the... no, I didn't. That's New Zealand dollar CAD. Euro US dollar. Yeah, I did post it in the members... in the position trading channel in Discord yesterday. So I got out of that one yesterday. I still think this is going to come down. I am holding a little bit of this myself still. Although if we get a push today, I'm going to get stopped out on it. I've got a really tight stop on it here, kind of break even on the rest of that position. But I closed this one out yesterday because I just wanted to get it off the books, basically. But yeah, I think this is still going to come down. I think this US dollar is going to strengthen up. So we haven't got any news catalyst today. The unemployment claims yesterday came out as expected and rallied the dollar quite substantially. So there is a growing interest in rebuying the dollar now. I think there's talk about all these tariffs being negotiated now, meaning being brought down. There's talks about additional tariffs not being applied now. So I think the market is now looking at what's going on with Trump and thinking, okay, he's kind of overstepped it. There's a good chance that he's now going to have to unwind some of this, which is probably going to strengthen the dollar moving forward. So any of these dollar squeezes that you might be in, for example, I've got US dollar Swiss on, they are worth holding because I think there's a good chance that we are going to start this reversal now and start to undo a lot of what we've seen with the Trump moves over the last sort of month. I think we're going to start to go back the other way now. Stock markets are recovering or basing out at least. Just seeing what we've got going on DAX. What a mess today. DAX has gone nowhere. FTSE's stuck as well. It's just a mess today. So yeah, so I think we've got some strength coming back in that US dollar now. So we'll see what happens over the coming weeks. But there's no catalyst today for the dollar. It's PMI week next week. And we've also got some CPIs and things in there. But for the US dollar, we're getting a little bit news light now for a while. So I think it's going to have a chance to sort of recover. If you look at the fear and greed index, just going through yesterday's news, there's the Bank of England rate. Bailey didn't come out for hours. It was about 3 o'clock he was talking. He was meant to be on at 12:30. But anyway, so there's all the Bank of England news. There's the US home sales. Yeah. So here's the fear and greed index. So we are ticking back up again. We were down at 16 at one point. We're ticking back up. We're still in, the stock markets are still very, very jittery. But the needle's going that way. The swings on this can be very, very quick. So, it just takes Trump to say something like, okay, Canada and Mexico, well done. You've stopped the fentanyl, or you're doing enough. We're going to drop all those tariffs. China, don't worry about it. Europe, we're going to give you a little 5%, not 25% as we initially thought. And that will shift like that. The stock market will rally. Obviously, NASDAQ won't rally, and or anything containing any Elon Musk shares won't rally. But I think it looks to me like it could be the start of a turn right now. So good time to start buying the dollar potentially. But we'll wait and see what happens. We haven't got any other news. Trump orders closure of US education department. Didn't see that. I thought that was a joke. I saw that and I thought it was a joke. I thought it was fake news. Seriously, you're shutting down the US education department. I guess he's replacing it with something else, and he's not just saying, "Don't worry, we're not going to educate any Americans anymore." Weird. Anyway, but that's the rest of the news. So, this morning, there's not a lot of movement, as you can see. ADRs are flat. There's nothing moved overnight over the Asian session. We've got these moves which are all starting to kind of kick off now. We've got a lovely propulsion gap put in yesterday on US dollar Swiss. That was the Swiss news. So weak Swiss franc coupled with a strong US dollar, potentially this thing could take off. There's quite a few weekly extensions. It is Friday. So these will all be extensions. When you get a weekly, an average weekly range extension hit, typically you will get an RSI extension anyway. So these will probably, an RSI extension or an ADR in this case as well. We got both yesterday. There are good mean reversion opportunities in at the moment. We've got a triple test of this propulsion gap here. If this fails, we're coming down to test this double weekly low we've got. So that I'm already in with an initial position. Next long is going to be a test of that level there for a bounce back up into here. But yeah, there's quite a few weeklies that are opportunities at the moment. Aussie yen, that's already played out. Aussie New Zealand, that started playing out yesterday. That's really extended the Aussie New Zealand. This one's starting to get on a run. Bit of a dangerous pair, Aussie New Zealand. Good propulsion gap buy yesterday. Started buying that up yesterday and it held. So this could well be the start of the leg back up again. Where are we? Aussie CPI is next Wednesday. So there's movement potentially next week on that one. And there's a few others, but nothing particularly exciting. RSI's quite flat at the moment. We had a lot of RSI extensions end of last week and obviously beginning of this week. So most of those have all played out. So if anything that you were in, you're quite probably out of now. So Aussie dollar CAD still extended on the 4 hour to the downside. That was an entry taken yesterday. So that was an entry I got into yesterday, but that was an hourly RSI extension yesterday that I got in on. So looking for a push back up into there and scale in obviously down into these lows. So that's a nice opportunity for a long, and Euro CAD also an opportunity for, that's a short, obviously, as we know. So that's an hourly to the downside. Sorry, no, that is a long. It's an hourly to the downside, but obviously we're looking for this to be a correction of this huge leg. So I think there's a good chance, like I say, this euro, it's going to undo some of this. It's how much of it it's going to undo. We'll have to wait and see. But anyway, so those are your RSIs and ADRs. Just quickly look at what the indices are up to. Okay, so we're breaking short on both this morning. So short DAX and short FTSE. I've got a clean break on the FTSE on the SIH, and the DAX is hedged. So just going to quickly look at where we're going to get out of the DAX today. Yeah, upside looks good. So upside is the propulsion move from yesterday. So if it does go long for any reason today, be looking for some sellers to start defending this sell yesterday. Downside, ADR, a bit difficult today. So that's ADR. There's this weekly level, which is what we tapped yesterday and bounced out of. It's exactly where we are today. So either this is going to hold and we're going to flip long, or we're going to break this low from yesterday, which means they'll flush down through this propulsion gap. It could get some support either somewhere around here. If not, then probably coming to test 125 ADR potentially, but it's whether it's got the legs to do that today. I'm going to leave it safe, actually. I'm going to move down to 125 ADR, so I'm looking for quite a big drop. Yesterday, we had this massive move. If this is the start of a propulsion move, then we may well get a fairly strong day today. So I'm just going to monitor this today and see where it goes, but a bit tricky to the downside. I don't like having my target sitting just in the middle of a massive accumulation. There's not really any reason for that to be a point that buyers are going to sit at. Buyers are definitely sitting there. We know that. We can see them. They're there. They're just buying that over and over and over and over and over again. Yeah, what's 125 ADR? So it's this propulsion move which they added into. So if they are still long from here, there's likely going to be orders added in there. Whether they hold or not, it doesn't matter. We basically want the bounce. I'm not interested in this going like that. I want it to just bounce so that I can get out of the hedge. Right, there we go. That's those covered. Morning, Themba. Gold is on the move, talking about propulsion gaps. Not really going anywhere at the moment. It's sideways at the minute. Obviously, this will come down if that dollar does power up. So, yeah. Who knows? 29.55-ish target. Where's that? It's a long way down. So these propulsion gaps to the downside, yeah, you're going to, it's a week away. But nice swing if it holds. So, yeah, if that dollar rallies, could easily be down there. Right. So anybody got any pairs they want to look at this morning? Let me know and I will go through and have a look at. I'm not going to go through all the pairs again today. But if there's anything specific you want to look at, let me know. So I just wanted to cover correlation this morning. A lot of people have been stung, me included this time round. Sorry, I'm just adjusting something over here. It's not working. 1 second. Unwilling clicky mouse today. Pound odd, have a look at that in a sec. Actually, I'll have a look at that now. Yeah, so a few people have been caught out with correlation. in this squeeze. So it's a good time to talk about it, basically. Yeah, pound odd, brilliant quadruple rejection at the highs. So this weekly high was a triple top or quadruple top over 4 days there. We tested that and immediately sold it off yesterday. So it's whether or not this market structure is going to hold. So you've got a reversal alert and a retest in there, which started the market structure leg long. So this is either going to retest here and go, or this is the iceberg and they're not getting it through that level. So they're going to flip short on it and come back down into this propulsion area here. There's multiple targets to the downside. So if you're in this from here, short, that was probably an exit, wasn't it? This is basically the same as the euro odd, look. Talking about correlation. So they're very, very similar pairs. So it's whether or not this is going to be undone, that euro move. And obviously we had a lot of strength in the pound as well over the same period, because the pound and the euro will bolster each other up. So pound yesterday got bullish news because obviously we didn't drop the interest rates. There is more members inclined to freeze rates. Therefore, it means that there'll be less drops coming up in the rest of this year. Probably another 2, maybe. So that is bullish pound. However, it's come off the back of a big bull run, which needs a correction. So basically all we got was a flag break and a new leg up. But that new leg was hard work. Yeah, and it didn't last very long. And then we put in a lower low. Yeah, so market structure here, that M pattern shifted to the downside because we broke that low. So what we were looking for was a new lower high. What we actually got was a higher high, but it was just about, and it's a double top. So this is either going to continue upward, but we still should get some downward movement, I think, on it. There's still more room to come down, especially into these propulsion gaps here. Or this is basically the ceiling and we're going to drop from here. So I would say if this continues down over the next 3 or 4 days, it's probably going to be a high and we're going to come back down into here. But it's difficult to tell with anything at the minute. The world is in such turmoil at the moment with finances and everything. It's like we're going through a divorce, basically, a worldwide divorce. Trump has divorced the rest of the world. So we've got to split everything up. Yeah, Russia and Ukraine have got to split up their stuff. Yeah, so it's one of those situations which nobody can really give any indication as to strength or weakness of an economy, because there's too many variables, too many cogs moving in completely different directions that have never been moving before. So, we've got to suddenly find 5% defence spending from absolutely nowhere. When we're on our knees in the UK, we haven't got a good NHS and, we're financially screwed. How do you find that extra 5%? Yeah. If you want to stay in NATO, you're going to have to pay, basically, is what Trump said. So everybody's got to do that. So, this is all changing. Everything is changing at the moment, which is kind of what I covered in the live room, in the members stream yesterday. You've got to diversify with what's going on at the moment. You have to diversify strategy, because strategies will not continue to work all the time. So you have to have that diversification in there to deal with what is going on in different markets as the world changes. I used the example yesterday of the pound New Zealand, which I've used many times before. This thing was trading at 450 pips before COVID. It's trading at 183 now. It's trading at 160 odd yesterday. Yeah, this thing is nowhere near as volatile as it used to be. So you have to have different types of strategies and different types of market. When you're in a calm market, breakout strategies aren't going to work. When things are expanding, breakout strategies is what you want to do, not mean reversion. So you've got to kind of adjust. And at the moment, it's difficult with FX to know what to do with anything, because we're not in a situation we've been in before. However, the thing that does stay the same is banks. and banks and institutions drive the financial markets. The financial markets are formed on greed. Therefore, when a move happens, it undoes a portion every single time. So this, as long as banks are moving the markets will mean revert, because the banks have to take profit on the moves that they put in. It's just the way it moves, the distance it moves is the thing that is the variable, and it always is the variable. So at the minute, with everything, it's kind of, this is kind of this fear and greed index that I pointed out on here. When you see this flipping, it took me a long time to get my head around what this fear and greed index was telling people, because I didn't really trade futures and options. And this is kind of their gauge, if you like, as to what to do. When this is down here, stock markets will collapse and FX markets will become volatile. Squeezes happen. When it's up here, you don't really get too many squeezes. So this is kind of your squeeze gauge, if you like. But the trouble with it is, if it was there, you've got no way of telling which way to go. But when it's down here, you know that things are going to get a little bit hotter, basically. So it's a case of trying to adjust to this when you see it going one way, but it will go very, very quick a lot of the time. So at the minute, it's a case of reducing risk. And again, what we're going to talk about this morning, reducing exposure to make sure that when these squeezes happen, they are more survivable. I got caught out this time around, but then again, I've never been through this situation. So you're always going to get caught out by something that you can't plan for. That's just basically life. It's the same everywhere, isn't it? Yeah. We've never had a squeeze of this magnitude. Therefore, there's no preparation for it. Everything I prepare for is based on historical information. This is new historical information. Same as the US dollar yen intervention. Yeah. Nobody had ever seen an intervention like that, ever in the history of trading. Now we have. Now we know that the Japanese have got the power to do that. But they probably haven't now, because their interest rates have changed and they've sold all their US bonds. But we have seen a move like that. And you can survive it. Absolutely. It retraced 68% of it. Why? Because the banks that did this got out with a profit. Yeah. Or rather, Japan got out with a profit. Yeah. Someone's always moving this. Doesn't matter who moves it. You don't need to know who moves it. You don't need to know why they're moving it. What you need to know is when they move it, they need to move it back if they want to take the profit on the move that they created. That's basically how trading works. Same as you and me. If we buy something and we add more to it and we keep buying it and it keeps going up, we have to take profit. You take the other side of the position to take profit. If you're buying it, you become a seller to take profit. When they're buying it, they become sellers to take profit. That's what pullbacks are. That's what market structure is. This is what we trade. So it's just at the minute, there is an awful lot more positioning going on, which is non-speculative, which is what I suspect, but you can never tell, which means that the moves will last longer. That's what squeezes become. But at the end of the day, when something's gone like that, there will not be anybody left. It's like and the fuel in an aeroplane. Yeah, you keep flying up, eventually you're going to run out of oxygen. If you run out of oxygen, your engine can't work. If your engine doesn't work, your plane comes down. When it gets more oxygen, your engine restarts. Yeah. There will always be an exhaustion point where the market literally won't find any more sellers. And at that point, you will see it start to take profit. When it starts to take profit, sellers will then start to step in, and this is where we get the move down that happens. So it's whether or not this is going to get corrected. Yeah, it's that basically, isn't it? But is it going to be this one? Is it going to be this one? No, it's this one. Is it going to be this one? No. Is it going to be this one? No. Is it going to be this one? Don't know. But if it isn't, you need to survive it. Yeah, it's all about adjusting risk, basically. So, right, there we go. This part about fear, greed, and squeeze is good for bootcamp. Yeah. This is the trouble with me. I've got 20 years worth, roughly, of knowledge of trading in my brain. It's all in there. I just can't put it into an order that everybody needs. Someone asked me a question, I know the answer to it. There's very little I don't know. But that's just, it's not me bragging. It's just me having been doing it for such a long time. But trying to get it all out of here and stick it into an orderly fashion that is understandable and deliver it in a period of time that people don't die before they finish the content is very hard. And that's what I struggle with. Snip that out and stick it in the bootcamp, basically. That's what I should do, really. I've said everything I need to say in the live rooms over the last 5 years. What we need to do is watch all of the live rooms over the last 5 years and chop out all the good content and put it all in an order. AI, can you do that? Can AI do that? I don't know. You say buyers, when taking profit, become sellers. How does that work? How does it not work? So when you buy, a market, any market is a transaction. Yeah. So think of a fruit market. You walk up to a fruit store. There's a guy selling oranges. Yeah. He wants to give you his oranges, and in return, he wants cash. Yeah, that's a transaction. He gives you an orange, you give him some cash for the orange. Yeah. On the pound odd, if I want to buy the pound odd, someone has to sell the pound odd. Yeah. If I want to buy gold, someone has to sell gold, right? So every transaction is binary in the fact that there are two parties taking part and they agree on a price. So if I continuously buy, someone is continuously selling. Someone is going into drawdown as I am going into profit. Yeah. So when you hit the buy button here, you are placing an order to buy from another party. When you close your order, you are selling that order and someone is buying it. The broker matches you up. Yeah, that's how markets work. So think of your P&L. So this pound US dollar that I'm in here. Yeah, I'm short the pound US dollar at the moment with all these orders. There's my average price. It's down here. I'm in profit. When I hit the close button, it will place a load of buy orders in the market to get me out of my sales, because there's a load of people at the moment that want to buy this, so I'm going to sell it to them because I own it, I hold it. I don't hold it, obviously. This is a contract for difference. There's nothing really tangible in this. Futures there is, but in this there isn't. But that's how it works. So in a bank, when they are buying currency, they are selling the US dollar and they are buying the pound. Yep. So if you want this to go up, you buy the pound with your US dollars. You have to be holding US dollars, which you will sell, and you will buy the pound. Someone will be doing the opposite transaction. They will be selling the pound and buying your US dollars from you because they believe that one of them will go up or down at some point. That's basically how it works. So when a market moves up, it will move down. It has to, because if the banks here, let's say their P&L is 0, they buy a load of this currency and it moves up. Their P&L is 1,000, just making numbers up. They move up, their P&L is 2,000. Move up, their P&L is 3,000. Moves down, their P&L is 1,500. Moves up, their P&L is 3,000. Moves down, it's 1,800. Moves up, it's now 4,000. It stays at 4,000, then it skyrockets up to here, and they're in 10,000 profit on this position. Million, 10,000 of whatevers, million, trillion, quadrillion, whatever their contract sizes are. Yeah. If they want this to be spendable capital by the bank, or if you as a trader want to take that 10,000 profit that you have in your account and spend it on a car, you have to sell your position because you've been buying it. When you sell it, a candlestick will go down. The price will devalue. Yeah, and it will keep doing this. So the reason markets move up and down is because within this move here, there are commercial orders, which are long-term orders, which will stay in the market indefinitely. There are speculative orders, which will be positions designed to make profit for the banks and institutions. There will be normal other types of transactions in here from pension funds, from hedge funds. The hedge positions will tend to be quarterly positions that will stay in there for 3 months. So basically, if you tot all this together, all the commercial positions are going to stay forever. All the hedge fund positions are going to stay for 3 months. The pension funds will probably stay almost indefinitely. The speculative orders, they'll want to get out of pretty quick. So it moves up by that much. And then the speculative orders, let's say these are the speculative orders, are removed to take profit. So that portion is removed from the move. It's a pullback, market structure. Probably a 38 retracement, something like that. And then the next move will start. If the bank or institution still has a willingness to buy the pound and sell the US dollar, it will then go back up like that. If not, it might go back up a little bit, and then they will change their mind and start to sell more. This is what markets do forever. They will never do anything different. And that's what market structure is. We're buying a load, we're selling a portion. We're buying a load, we're selling the same amount. Now we're selling loads of it. We're going to buy a little bit. We're going to take profit on that leg there by 50%. We're going to sell it. We're going to take profit on 50%. We're going to sell it. We're going to take profit on 50%. We're going to sell it. We're being beaten up by the buyers who have sold half of it. Now they're buying it again, selling 3/4 of it, buying it, selling a third of it, buying it. They're going to sell a portion of it. How much? No idea. You can't see into the future, but they will sell a portion of that move. They could sell the entire move. But it's all to do with the fundamentals of the pound and the US dollar, which is the most valuable to hold. If you think the pound is the most valuable to hold as a bank, you will buy it. If you think the dollar is the most valuable to hold, you will sell your pound and buy dollar. Unless you have a crystal ball, there's no one on the planet that can tell you which way this is going. It doesn't matter how many courses you do, how many gurus you follow, how many books you read. This is going to go that way or that way based on the bank and institutional buying pressure, which is going to change on a daily basis based on the commercial orders they receive and their view of which currency is the strongest. Trump says something and their view will change. So if you're selling this now because it's a triple top, if Trump says something that's really, really bad for the dollar, this thing's going up. Your triple top analysis that you learned from a book or paid £2,000 to a guru for means nothing. ICT told me that this fair value gap is going to be something they're going to sell from. So I'm selling it. Oh, it didn't work out. ICT's wrong. No, the banks just changed their mind. Nothing to do with ICT. In fact, obviously, everybody knows ICT's a load of, So we could go back from time to time. Yes. You're talking about the videos, weren't you? I'm saving YouTube sessions with you, but it's a bit messy. No order. Yeah, well, yeah, that would be great. I'd love somebody to index everything I've said over the last 5 years. It'd be amazing. I have been totally unordered with everything I do. This is the problem. But anyway, so yeah, currency correlation is what we're going to talk about. So I've got a couple of websites up here that do currency correlation. This one, Mataf, is one I've just found, and I'm trying to figure out how they are. It looks really good, but I'm trying to figure out how to read this. I'm struggling, to be honest. That's 4-hour and daily correlation. Okay. This is the one I've used in the past. That's that's still loading. Right, okay. God, that's complicated. Anyway, so this is one I've used in the past. So the correlation is something that is very important to understand. I've got a weekly correlation up here at the moment of all the pairs. So if I put in here 75% minimum correlation, what this is doing is it's going to highlight to me things that move the same. Yeah. So I'm going to use as my example the Euro odd. Yeah. And the Euro New Zealand. Now it doesn't, that's Euro US dollar. It doesn't take a rocket scientist to see that these are virtually the same thing. If I switch from Euro New Zealand to Euro odd, yeah, it's slightly different, but it's not, is it? It's the same. So if you look at this currency correlation chart and then go and look at the Euro odd, which is here, and then you look at the Euro odd there, it's 100% correlated. Yeah, so there's two columns, two rows rather, or a column and a row with the headings. So euro odd is euro odd, 100% correlated. But if we go down on this chart, you see here that the euro odd is 86% correlated to the euro New Zealand on a weekly basis, meaning that if you go and place a trade on the euro odd and you go and place the same directional trade on the euro New Zealand, there is an 86% probability that they will either both win or they will both lose, meaning that you are doubling your exposure to the same movement. Yeah. So what we're trying to do as traders is, or as position traders specifically, is scale in and out of movement. If you are getting into these two together, you're basically just doubling your risk. So if you take a 0.25 or 0.2% risk on an initial trade, you're actually taking a 0.4. If, as we've just seen, we have a squeeze which is off the charts, you're double squeezed. You're taking two different trades at two different times on two different readings. With, that's absolutely fine, but you're taking the same thing. So it's important, especially now, that you look at this if you're running a portfolio, and understand where the correlation is. The amount of correlation is entirely up to you. Anything that is above 75% correlation, you're often going to find, it's about surviving squeezes basically. If it's above 75% correlation, it's likely that it's going to hurt you. Aussie dollar Swiss and the euro yen, you wouldn't think that those two, 4 different currency pairs there, the Australian dollar, the Swiss franc, the euro and the yen, 4 different currencies individually, but they are 76% correlated, those two pairs. So if you were to take a long on the euro yen and a long on the Aussie Swiss, there's a 76% chance that you're going to get hurt twice, not once. Yeah. So this is a really handy little tool. I'll put it up in the chat. It's on my FX book basically. So it's worth having a look at this and looking at the moment at pairs which there's no point in trading both. So if you go up above 80, or let's see if we can go above 90. Yeah. You've got 3 instruments there: Aussie dollar yen and euro yen, 93%. So don't trade Aussie yen and euro yen, pick one, get the other one out of your portfolio. Euro yen and Aussie yen again there. You've got pound yen and euro yen, 91% correlated. So the obvious thing to do here is to dump the euro yen. Yeah, keep the pound yen and keep the Aussie yen, but dump the euro yen, because the euro yen is correlated to both of those. So if you get rid of that, you've got that one and that one, and that one and that one are not correlated. Well, they are. They're 88% correlated. So drop it down to 80%. And now all of a sudden you're like, okay, we shouldn't be trading these either. We shouldn't be trading the Australian CAD and the pound US dollar at the same time. That's probably the best one to pick. So this is something that's worthwhile going through in more detail individually to see where your exposure is. If you have very, 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 very small lot sizing and risk, or you can trade everything. Yeah, there's nothing wrong with trading everything if you're using tiny risk. So if you're risking 0.1% initial trade and you're trading 3 things correlated, you're actually trading 0.3. That's still a little bit risky, isn't it? So, and some people have, I've been seeing in Discord, they're getting in with 0.5%, 0.5% risk over 1 ADR. Squeezes are going to last 6 or 7 ADR. People are realizing why I recommend the lot sizing I recommend with this strategy. Yeah, that's way too hot. But this will allow you to instantly see what you should not be doing. Yeah. So use this and you can set whatever level you want to. It depends, again, there's no right or wrong. It's how cautious do you want to be. If you set it to 50% correlation, so things that are 50% correlated, and you said, I'm not going to trade anything that highlights in green here together, you're going to get rid of an awful lot of pairs, but you are going to have a very unique uncorrelated portfolio. So again, I did a little, I've been doing some work, as you know, on the opening range breakout strategy and the new version. I did a currency. So this is as part of what I do when I'm doing strategy development. I do currency correlation or instrument correlation testing. I'm just going to load this up quickly just to show you. So this is the, let me just load the portfolio. So this is the new opening range breakout strategy over the last year, just using a $50 risk trade, $50 per trade risk. And the bit I wanted to show you was this portfolio correlation here. So in Quant Analyze, you have portfolio correlation. So this is very much the same as what we just looked at with this currency correlation here. So I'm going to load up profit and loss by day here and just compute that. This is the correlation matrix. It's actually really small. You can't really see it very well. But what it's showing you is this is all green, meaning that none of this is correlated. So this is the performance of the DAX, the Dow, the NASDAQ, and the S&P with the new opening range breakout strategy. So that's the portfolio. That's the P&L. These are the individual P&Ls of each instrument, the sub-equities. And this is their correlation. If you see anything in here that isn't green, it means that at the same time, on the same day, they had a very, very similar profit and loss, meaning they both were doing the same thing. So the reason I check this is mainly because of the NASDAQ and the S&P. They quite often fall in line with each other and they're correlated in their daily movement intraday. So I wanted to make sure that the trades taken on the NASDAQ and the S&P were unique. And as you can see, these have actually got very, very, very low correlation, 23%. So these are 23% correlated, which means that 77% of the time, having to do maths, I went out last night, it's quite difficult doing maths this morning. 77% of the time, you're going to get different trades on them, but it means that 23% of the time, so 23 days out of 100, they're going to do the same thing, which means that if you have a loss on the S&P, 23% of the time, you're going to also have a loss on the NASDAQ. If that was above 50%, I'd be saying I'm going to choose one or the other, not both. Yeah, and it's the same as this. Yeah, so anything here that is above 50% correlated means that if you go long on something, 50% of the time, if you went long on something else, they're both going to either going to draw down or profit at the same time. When they all go into profit at the same time, it's amazing. Can you imagine having stuff that's all correlated and moving in the same direction and you get it right every time? You're going to quadruple your costs. We're not interested in quadrupling our profits, rather. What we're interested in is surviving long-term squeezes, yeah, for position trading. And this is where this comes into it, yeah. So anything that's really low like that, 13.7%. So the Aussie CAD and the Euro Yen are just not correlated at all. Absolutely not correlated. So that's absolutely fine to trade. You also have to be a little careful of what's called negative correlation. So if we look at minus 50, does that work? No, you can't do minuses. No, you can do, it says. So just use an example here because I just spotted one. Where did I see it? Minus 73. There we are. So this one here, minus 73.8%. What that means is that the Euro odd and the Australian dollar yen are 73.8% negatively correlated, meaning that when the Euro odd goes up, 73.8% of the time, the Australian dollar yen will go down. Yep. So they are correlated, 73% correlated, meaning that they will go the opposite directions. So think of an RSI. When the Euro odd is going up, yeah, the RSI will be going up on the Euro odd. On the Aussie yen, the RSI will be going down, meaning that you will take a short on the Euro odd and you will take a long on the Aussie yen. Now, if that plays out, that will play out. If that doesn't play out, that won't play out. So they are correlated. So you have to be aware of negative correlation as well. So anything above, let's say we're going to be cautious. Anything above 75% correlation, we do not want to trade. But we also don't want to trade anything. You want it in below, don't you? Minus 75. There we go. That's how you do it. So anything below minus 75, or let's go 70. Let's be a little bit less aggressive with it. You don't want to trade, yeah, because they are going to move together. So they're going to move the same. And it's the same with the negative correlation. Yeah, if something's going up, the other one's going down. So when US dollar CAD moves, 82% of the time, the Aussie dollar US dollar will move as well. Why do you think that is? It's because it's the US dollar, yeah, and it's two commodity pairs together. So the Australian dollar is a commodity pair, the Canadian dollar is a commodity pair. So you're having the world's leading currency against commodity markets. It's the same thing. 82% of the time, they're going to do the same thing, because if commodities are dropping or the dollar is rallying, they are both going to move. Yeah. So there's a negative correlation there, which you probably wouldn't think or spot in the normal world, but this tells you about it. So depending on the time frame you're looking at, and I'm looking specifically from a position trading perspective here, I want to look at long-term correlation. So monthly and weekly. So you can, this will change as well. Yeah. So obviously at the moment, we're going through kind of a worldwide shift in economics at the minute. With, as I said earlier, the US dollar's basically divorced everybody. So we've all got to now go and find our own way to make money, or our own new deals with other parties. So the correlation and the way that currencies move is based a lot on trade. And if the trade dynamics are going to change, the correlation between currencies is also going to change. So this is something that is worth checking on. And I used to use this a lot when I first started trading. And then I stopped using it because I kind of understood the correlations between everything. I understood what commodity pairs are and how they move together and why they move together. But this is something I think is probably going to be worth looking at every month or two now, because I think this is going to change. So looking at it on a weekly basis, if you're an intraday trader and you're trading 5-minute charts, you can look maybe at hourly correlation. And at the moment, are things moving together? The Aussie dollar CAD and the Euro odd are moving together at the moment. Why do you think that is? Because the Australian dollar is moving. Yeah. So obviously the euro against the odd and the odd against the CAD is moving in the last hour similarly, because the Australian dollar is being moved. It's got nothing to do with the euro and nothing to do with the CAD. It's because the Aussie is pushing or pulling. Yeah. But on a weekly basis, we don't care what it's doing at the moment. We care what it does over a long period of time. If we're going to be sitting in a squeeze for 4 to 6 weeks on something, that's what we're going to look at. So it doesn't make sense to trade the Aussie Swiss and the Euro yen together. It doesn't make sense to trade the pound yen and the Aussie yen together. It doesn't make sense to trade the pound US dollar and the Aussie dollar CAD together at the moment, because they do virtually the same thing. Yeah. So play around with it. What you pick, is a personal preference. So conservative, super aggressive, 80% or so, I guess. There's no right or wrong. It's just a case of making yourself a little bit more bulletproof moving forward. So the thing you need to really be aware of with this is, if you are going to go really aggressive with this, or really conservative with it, really more, you're going to remove an awful lot of trading instruments from your portfolio, which means less opportunity. So with less opportunity comes less drawdown, but with less opportunity comes less profit. So you've got to be a bit careful that you don't iron out and say, right, I'm not trading any of that lot because of the correlation being like this. I'm going to trade these 5 pairs. If those 5 pairs for an entire month sit there and just do that, and you never get an RSI extension on them, you're not going to make any money. Yes, you're not going to go into drawdown, but you're not going to make any money either. Yeah, the whole purpose of this is to try and make money. So you've got to fine tune it a little bit. One thing I would say with it is, when you're looking at things to eliminate, try to eliminate things that are costly to trade. So for example, let's look at Aussie dollar Swiss and Aussie dollar yen as an example. Yeah, so Aussie Swiss and Aussie yen. So if I look at those two pairs, Aussie Swiss, yeah, I can trade the Aussie Swiss when it ticks. Come on. I can trade the Aussie Swiss long for $2.20, which is great. Short for minus 8.20, right? So for me, I could choose to trade this in both directions. It's going to be slightly more costly to do that, and I am going to up my my swap tolerance this from now on because it's a bit too restrictive. So that one is 220 to go long, which is great. I get paid 820 to go short, which isn't too expensive. So looking now at the Aussie dollar yen, the Aussie dollar yen is going to pay me 5.55, but it's going to cost me 17.47, right? So this, if I short it, has a twice as much cost involved in swaps for long-term holds. So if I'm looking to eliminate either the Aussie dollar Swiss or the Aussie dollar yen, yeah, for me, the Aussie dollar yen is the one that's going. I'm going to keep the Aussie Swiss because the Aussie Swiss is cheaper to trade. Okay, so that would be my decision-making process going through this. Then if I find that the Aussie dollar Swiss, you can change these, by the way. So let me put the Aussie dollar Swiss up on the top there. Let's get rid of the euro for the minute. Yeah, so I put the Aussie dollar Swiss up there. So I'm trading the Aussie dollar Swiss now. Well, I've eliminated the Aussie dollar yen. Now, Aussie dollar Singapore dollar, I don't trade, obviously. You can filter this to get rid of anything you don't trade, basically. It's also correlated with the CAD Swiss. Okay, so if I'm keeping the Aussie dollar Swiss, I now need to look at the CAD Swiss because it's really correlated with that. So the Aussie dollar Swiss I'm going to keep at the minute, but the CAD Swiss is 850 and 230, and the Aussie Swiss is the same, isn't it? It was 220 and 820, right? Now look at the two of those, Aussie dollar Swiss, and I switch over to the CAD Swiss. If I draw what's happened on this on here, yeah, and then switch over to the Aussie dollar Swiss, it's more pronounced, but it's doing the same thing. Yeah, so that squeeze there on the Aussie Swiss happened on the CAD Swiss. Why? It's the Swiss, but the Australian dollar is a commodity pair. The Aussie dollar is a commodity pair. The Canadian dollar is a commodity pair. So you're trading the commodity markets against the Swiss franc. It's the same thing. So you need to get rid of one of them. So I'll keep the Aussie Swiss. Might as well keep that one. I've just, oh, you can filter it. Look at that. Brilliant. Right. That's a really easy way of doing it. I didn't know you could do that. I've just discovered something by accident. I love it when that happens. Obviously, Aussie dollar Swiss against the Aussie dollar Swiss. No. So New Zealand dollar Swiss and the Aussie Swiss move together. Aussie and New Zealand are trade partners. They're both commodity pairs traded against the Swiss franc. Of course, they're going to be 90% correlated. So don't trade the New Zealand dollar Swiss. Keep the Aussie Swiss. CAD Swiss, going to get rid of that. 90% correlated. Commodity pair against Swiss. Commodity pair against Swiss. Aussie Singapore, I don't trade. Right, and we've got some yen pairs. Now, I need to pick a yen pair to trade. It's not going to be the NOK. It's not going to be the euro. It could be the euro, actually. So if you're going to trade the Aussie Swiss, you don't want to be trading any of these yen pairs because they're the same thing. Just trade the Aussie Swiss. If you trade one of those, there's an 84% chance if you trade the Aussie yen and the Aussie Swiss, you're going to get double exposed. Yeah. So this really highlights how much correlation is hidden. You wouldn't imagine that the Canadian dollar against the Japanese yen would have anything to do with the Australian dollar against the Swiss franc, but it is 82% moving the same. Yeah. Don't trade that with that. It's pointless. The costs of swaps on that are ridiculous. The ideal is to find something with a swap cost that's acceptable, and I'm going to be changing mine up to $10. I decided 5 is too tight, so I'm going to go with 10 now. Yeah, 10 is going to be my new norm. So anything that costs less than $10 negative to hold as a swap, I'm happy with. So this one, for example, I'm now going to trade Aussie New Zealand dollar in both directions. Yeah, Aussie CAD, trade in both directions. Yeah, so if you come across something that is correlated that has a very high swap value, like this one, 17.47 on the Aussie yen, goodbye Aussie yen, I'm not trading you. Yeah, so that's the best way to do it. So in your own time, just go through and have a look at correlation and pick what you're comfortable with. as I say, there's no right or wrong, and the danger with this is you go too overboard with it, and you look at what you're left with, and you're like, I'm only trading 6 instruments. But what you should do if you're trading those 6 instruments now is maybe up the risk on those 6 instruments and don't trade the rest of them. Or you go, screw it, I don't care if they're correlated, and you drop your risk down to virtually nothing, which is what a lot of people are doing. Yeah, we've seen people in the Discord channel posting their results. And the question that is asked the most common in there is, what pairs are you trading? Everything. Really? And then someone else will say, I'm trading 15 pairs. Someone else will say, I'm trading everything but the yens. Yeah. Normally, because it's what I've said in here, I'm not trading the yens at the moment. So people go, oh, I'm not trading the yens because Lee's not trading the yens. Doesn't make me right. The yen's been doing some beautiful movement. You could have been paid a lot of money on it. I just chose not to. Doesn't mean it's the right thing to do. Make your own decision on it based on what you see. Yeah. Looking at the yens, euro yen, let's sort that one. It's obvious that you're going to get correlation with the yens. So the euro yen here is correlated with the NOK yen, Aussie yen, pound yen, New Zealand yen, SEK yen, CAD yen, Singapore dollar yen, US dollar yen. So basically all the yens, and the Swiss yen down here. Now this is interesting. The euro yen and the Swiss yen are not correlated. So if you want to trade the yen, trade the euro and the Swiss. But forget the rest, because they're all going to move 80 to 90% at the same time as the euro yen does. Because it's the Japanese yen, it's a safe haven currency. When it's manipulated, they're all manipulated at the same time. So trade the Swiss yen and the euro yen. Or decide to go, I definitely want to trade the pound yen. So, okay, trade the pound yen and the Swiss yen. Yeah, so the Swiss yen is the safe one. It's still 64% correlated though, but it's less than 70, so that's probably all right, isn't it? If you think something that's 60, think about a Fibonacci, right? That's your fib, that's your leg up, okay? We typically look for 23 flag breaks, 38 shallow retracements, 50% retracements, and then deep retracements at 61 to 71.9, yeah? If you think something is 64% correlated, that means that the negative correlation on that is 36%. A 38 retracement is probably a pretty good number to have, isn't it? If the Swiss yen and the pound yen both push hard at the same time, there is a 36% chance of a pullback on one of them if the other one doesn't, meaning that there's always going to be one exit, which means you will be able to get out of one and maybe hold the other one for a bit longer. So probably I would say 70% is not a bad number to look at for a correlation. But anyway, any questions on that? That's basically it. Would it be possible for the Posier to check open trades and skip correlated entries? No. It probably is, yes, but it doesn't. I'd have to have data feeds and all sorts of things because it would need to check correlation. How you measure correlation on a weekly, daily, monthly basis, it's all, yeah, very up to you. So it probably could, but why not do it yourself? But yeah, everybody's always trying to automate everything. This is something you need to look at once every month or two, and it's going to take you 20 minutes. There's no point in automating it. When I used to work in web design, yeah, customers used to come to me and say, right, I want a website, I want an e-commerce store, okay, and it's going to be selling books, okay, and what I want is every time someone sells a book, I want the order to be automatically sent over to the warehouse to print the order, it automatically goes over to the distributor and reorders the stock at the distributor, it then sends the customer the email and it sends me an email, and then it does this, and they come up with this complex thing, and I'm like, right, roll back a minute, okay, you're going to set up a website selling books. Let's start there and see if you sell any books. What do you mean? Well, of course I'm going to sell some books. Are you? You do know that there's a thing called Amazon out there and you're competing with them. They're quite big. They've got a lot of money and they sell a lot of books. So let's see if when you launch your store, your marketing budget, what marketing budget? You haven't got a marketing budget for your store? Well, how are you going to sell books? Well, I'm going to put the website up. Everyone's going to visit the website. How are they going to get to the website? Well, they just are. Okay, let's roll back. All this complex automation that you want, okay, will work. And I can introduce this in the future for you. But let's see if you sell a book first. Now let's talk marketing budget. Have you got a marketing budget? No. Right. Scrap the store because no one's ever going to visit it. You're basically setting up a shop on a desert island with no boat. Ah, yeah. Haven't thought about that. End of phone call. I probably didn't do very well as a salesperson because I told people what it's like. And this is probably why everybody loves my channel, because I tell them what it's like in trading as well. But with all of this sort of stuff, it would be lovely if the EA could do this. It would be lovely if the EA could do that. But there's no point in automating things that take so little time and are so infrequently needed that you can't do it yourself. Yeah. So every 4 weeks to 6 weeks, pop onto this website, do this, and check through and make sure that the VPS has the same pairs on as it had 4 weeks ago. Done. Do it at a weekend. Do it with sitting down watching some crap that your wife's made you watch that you don't want to watch on telly. So have your laptop open and go, this is good, dear. I think I'll add the Swiss yen in. Doesn't negative correlation mean that they would move in opposite direction? Yes. Morning. Can't say your name, Peter. I can't say your other name. I can say the name Peter, but I can't say... I can't do the G and the Y next to each other. Yaraki. Don't know. Silent Bull Trader. Hello, Lee. When ORB new one will be released on your website? Today. Hopefully. Yesterday, I spent all this time going through checking default settings and creating set files for defaults for each instrument. So obviously DAX, Dow, NASDAQ, S&P and FTSE. The Dow, I'm really struggling to get a decent setting on the Dow. The Dow's very awkward. Where are we? The Dow basically doesn't move in the same way as the other indices. It's so much slower because it's only got 30 stocks in it. It's a bit of a slug. It's the Dow Jones Industrial, so it's the industrial stocks. They tend to be big hitters with very secure movement. So the Dow, I find, is either explosive or not. And if it's not explosive, it's actually quite hard to make profitable. When I've done all the analysis and going through the set files, when I did the system parameter permutation testing, the Dow was one of the ones which was like meh, wasn't really that good. But I struggled to find a set file that works very well consistently on it. I wanted to try and find set files that were similar. So this is the Dow test. We've still got return on drawdown factors of 4, but it drops off very fast down to. I reran tests on this with 2,000 tests yesterday. When you get down into the 500 test level, it starts dropping down to break evens. Not break evens, but your return on drawdown is the same. It still makes profit. It still made $2,000 profit on a $2,000 account in a year. So it's doubled the account, not a problem. But it also took 2.5K in drawdown to double the account. So what it's saying is it would have blown the account. So you need more capital, which means if you put in 5K in, you're going to have 50% drawdown to make 50%. So it all still works, but you need more capital. So I'm just struggling, and this is what I'm trying to do, is just get default set files done for each. But I want to keep the settings as close as possible to the same to prove robustness, because a robustness test should really be able to take this and apply the same settings to an instrument that moves in a similar way and get a positive result. And I do get a positive result across them all, but the Dow is just proving very stubborn. You can probably tell which one the Dow is here. It's the one down here. Yeah, but overall portfolio is absolutely fine. Yeah, so it's trading. This is what you're seeing here is basically the results of this portfolio. Yeah, so it's the NASDAQ, DAX, Dow, S&P, and FTSE as a whole. That, yeah. So once I've got those set files finalized, which I will do this morning, I'm ready to go, basically. So the video is done. And on YouTube. There. So this is the video, but you can't access it yet because it's hidden. But this goes through the strategy, how the EA works, etc. It's only 6 minutes long. I did a video that's 6 minutes, not 6 hours. But it just explains the strategy, explains all the robustness testing, you know, all that sort of stuff. So that's all done. The manual is rewritten with all the inputs. The only thing I've got to do is put all the licensing software into the EAs and do the set files. Yeah, that's pretty much it. So yeah, it's pretty much ready to go. Please, not an AI voice. No, it's not. It's not an AI. It's not an AI voice. No, it's my voice. You can't hear me, but.
And dragging it to the area you would like to take profit.
That's me.
The EA can also use.
So yeah, it's ready to go. I just haven't. I'm struggling to find time. I'm probably going to take next week off. Actually, I forgot to say. I've got so much stuff I need to get done that I'm just not finding time to do. So I think what I might be doing is taking next week off. I still haven't decided yet. To just basically get a run at the EAs. I've got so much stuff I want to do to the position trader EA, to the portfolio dashboard. I've got a new strategy that I've been personally trading for a while now, which is killing it. At the moment, especially killing it because of the volatility. But I've done back testing and it's killing it all the time. Not just as effectively as it is at the moment. So I've got another strategy that I want to get out there. I mean, I've got another strategy that I've got half developed on the shelf. I covered all this in the members room yesterday, that I want to couple with this new strategy to provide a robust mean reversion breakout combination that should really be able to survive any market. It won't be massively profitable because it's always going to be making a loss when the other one's making a win. It's sort of like a hedge, but it's very consistent. So I've got so much I want to do, but I struggle to find time at the moment. So my wife said, why don't you just take a week off and just blitz the website and blitz all the work and get it done, and then you'll be able to come back with everything done. So I'm considering doing that maybe next week. But I want to get, first thing I've got to do is get the ORB out and done so that that's finished. And I found a bug yesterday. There you go. So that it's not a bug. It's not a problem really. But I found yesterday that this one took a short here and it's just taken a profit on the short, but the partial close doesn't get removed. And the way I've coded it, these two get placed on the pending orders. And I've got to get that really should be removed. I mean, you can manually remove it, but I found that yesterday. So it's, you know, all these sorts of things. For me, it's quite an easy fix to get that sorted, but it's still an hour's work. I've got to do it on MT4 and MT5. I've then got to re-release and republish, re-zip the files up, put them back up on the website. You know, every amendment I make to anything is an hour or two's work. And every time I do a completely new product, it's 3 to 6 months of work. Again, I covered all this in the live room yesterday. The opening range breakout version 3, which I'm about to release, isn't just releasable. There is days of work in production of manuals, videos, and all that sort of stuff. Obviously all the coding work, but the main part of it is the testing. Yeah, I've gone through 4 weeks of live forward testing with it. More than that, MT5 forward testing, all the back testing, the analysis, the robustness testing, going through the results. It takes me days to go through the robustness test results. Yeah, you're sitting here looking through 4,000 different strategies. and the results of 4,000 different combinations of strategies on one individual instrument. Each individual instrument takes 2 to 4 hours to test. Then I've got to go through the results. So, doing a test on the S&P and finding out whether or not it's a robust strategy will take me a day. That's just one instrument. If it doesn't work out, that's my day gone. Yeah, so there's a hell of a lot of work that goes into everything that I do. It looks really simple, but it's not at all. Very complex. And it's just time consuming, and it's only me. And obviously Discord and Telegram, it just eats up my life. So long answer short, it will be out hopefully this afternoon. As soon as I finish this stream, I'm going to get on with it. So I'll be done. With news, do you review the entire week's news first Monday, then recheck every individual day news again at the start of each day? Yeah, so basically the Monday stream is always going through what's coming up this week. Every morning, what's coming up today, because you need to know what's going to move and when. Yeah, so yeah, you have to look at news every day, obviously, because otherwise you're going to, the amount of times I sit here and I see in Telegram especially, it was a lot more rife, but it's less rife in the Discord channel. Someone will post in one of the rooms, wow, why is the Swiss franc moved? And you have to hit your head against the wall and go, if you don't know why the Swiss franc is moved, you shouldn't be trading. Yeah, it's obvious why the Swiss franc moved yesterday. Yeah, to me, but it's not obvious to everybody if you don't know what moves the market, obviously. But first thing I do in the morning, literally in bed, I open up my laptop, I check the charts, I see what the P&L is looking like, I'll deal with any trades that I've got, and then I look at the news, what's coming up this morning. And the reason I do it in bed is because news comes out at 7 a.m. I need to be at 6 o'clock in the morning going, right, have I got any pound exposure on? Because in an hour, this is going to go nuts. I need to deal with my pound exposure. So you've got to check this every morning. Like today, first thing I said today was, right, today we've got CAD retail sales coming up. So if you've got any CAD positions on and they're in profit now, you know what to do with them. Yeah, you've got to deal with them. Either protect them, take them off, or if you want to, get into a new position. Or if you have got a setup ready to go on the CAD and you're going to take a new position, do you want to take it now? Or do you want to wait for the news? Because you could take a position long and it collapses today. So are you better waiting for the collapse and then taking your first position there? But if you don't know it's coming, you can't prepare. So you've got to look at the news every day. And you've got to look at the news every week as well, obviously, to see what's coming up. And look at next week. Please not. I've covered that. Thanks for subscribing, Cantrex. Welcome aboard. I assume still no joy getting on the marketplace. No. I tried again yesterday. I recoded. Again, this is the other thing. I recoded yesterday afternoon when I found that little bug. Not bug. When I found out that the line wasn't being removed when an order's closed, which is still in there, and it's still going to be in there. It doesn't make any difference. It really doesn't affect functionality in any way, shape or form. So it can just be ignored. But when I found that, I had a little brainwave and I was like, I wonder if I could try this. And I spent about an hour recoding part of it to get it up on the marketplace again, still getting the same error. So I can't do it. It's one of those, and I think I'm done with it, to be honest, the marketplace. I can't really be bothered with it anymore. It's just not working. There are people moaning at me all the time about not being able to pay. If you can't buy something on a marketplace, what's the point in having the marketplace? Yeah. People want to use PayPal. It doesn't take PayPal anymore. People want to use cards. It doesn't take half the cards anymore. And it says you can use other payment methods. One of them is a Russian payment provider. I ain't putting my card through that, mate. Sorry. I'm not using it. Yeah. So there's a lot of restrictions on the marketplace. It's really easy if it's easy for you, but if it's hard for you, it's impossible. So the ORB is going to be the first new release, basically, that isn't going on the marketplace. Not through want of trying. I have tried for days. Like I said yesterday in the member stream, I've removed the stop losses from the entire strategy because it tells me that the stop loss is being placed too close to the open price. So I have removed stop losses from the strategy. It doesn't use them. It doesn't mention them. It doesn't place them. It literally places a 0.01 lot in the market with no stop loss. And the error message tells me that the stop loss is placing too close to the open price. It doesn't use one marketplace. I can't get around that. I cannot fix a problem that is not a problem. It's a false positive. And if they don't fix it, then I ain't using it. I can't do anything with it. I just can't do anything with it. So yeah, I even built another EA. I built another little EA, which used stop losses, and I made it specifically use a really tight stop loss. Right, it was a stupid simple EA. It basically bought when it crossed above a moving average, and it used a 5 pip stop loss. And I used a very small stop loss for the purpose of testing this functionality. I uploaded it to the marketplace. It went up first time, no problems. So I've actually created the thing that they're telling me is a problem, and that was uploadable. Yeah. And yet my thing that doesn't use a stop loss won't go on the marketplace because it says it uses a stop loss. It's literally impossible to beat. And like I said, I've looked on the forums. There are thousands of people on the forums just moaning about this problem, and they can't get around it. And sorry, but yeah, give up. My licenses are also more flexible. So if you buy it from the website, I give you 5 broker licenses, and you can change them. So basically it's unlimited for life. Yeah. So when you get 5 licenses, you give me the broker accounts and the broker name, which obviously matches your name. And if it doesn't, I'll be saying, why is the broker name different to your name? It's obviously not your account, is it? Therefore, it's not your license. Therefore, you can't have it. But somebody's also tried. I want 3 licenses. These are the 3 broker accounts: Joe Blogs, John Smith, and Frank Sinatra. What's your name? Elliot. Okay, so these aren't your broker accounts, are they, Elliot? No. Okay, so you've basically bought it once and you've given it to 3 mates. Yes. No. You basically give me your broker accounts, and nobody's trading more than 5 accounts with the same strategy. If you are, there's a problem, so don't do it. But you're never going to be able to use all the licenses. And if you change brokers, you just give me the new broker license, and I remove the old one and put the new one on. Simples. I do it all manually though, so it doesn't happen immediately. So I'm here all the time. So yeah, basically it's just so much easier. I don't have to worry about the marketplace basically. And you can basically just download all the EAs direct on here. So they're all up here. You can download a demo to use in the strategy tester. You can get a 7-day trial on them all. You just fill out the form. And again, give me your broker account number. Select which EA you want. I'll license it. That tells you how to find your broker. That's your broker number, account name, account number. That's all I need. Very simple. But I don't have to tit about with, don't know. If you change names, Harold, you're going to have to send me your passport. I don't know. If you change names, that's fine. But if you change names, your broker number's not going to change, is it? If your account number is 123, like this one here, there's my account number, and there's my name. If my name changes, they don't change my account number. So if that matches, and then you come back and say, I've changed my name to Joe Blogs, no problem. But we're probably talking about an instance which might happen once, maybe in 10 years. Maybe. I don't personally know. I do know one person that's changed their name in my entire life. One guy called David changed his name to his surname, basically. That wasn't because he got married or anything. It was just because he decided he didn't like his surname. I think he didn't like his parents, but he changed his surname. That's the only person I know that's ever changed their name. So I don't think that's going to become a problem. If it does, I'll deal with it. But yeah, I don't know. You're quite welcome to change your name anytime you want to. But you know, I'm just trying to make it as simple as possible, basically, to get stuff done. Hello, Julian. Morning. I would rather buy stuff through you, but it's having faith I can correctly load it with Marketplace. It's so easy. A provider like you should be given a telephone contact. Yeah, it doesn't work like that. I can't get through to support. Yeah. And this is the other thing. If you have a problem with any with installation or anything like that, it's impossible to get help. Their support department has got a 48-hour turnaround, and you can't get past the bot to fill out a form because the bot is just so restrictive. But when you download the product from here, you get a zip file. I'll download that. And in the zip file is full installation instructions. So, and don't forget I'm in Discord as well. So it's very, very simple. So when you download it, yeah, there's the EA installation instructions. So in the folder is the MT4 version and the MT5 version and the installation instructions. Very, 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 very simple. Tells you how to install it. There's absolutely nothing to it. So you go to options, you allow web requests to that website, license check. Yeah, you open your data folder, you find your MQL folder, 4 folder or MQL5 if it's MQL5. You dump the EA in that folder, and it will be in there. It's really easy, really easy. If you haven't installed one before. So you just basically go to File, Open Data Folder, MQL4, Experts, EAs. That's it. Thinking about John Wayne, Harold. Yeah, you could call yourself John Wayne. Call yourself Jane Wayne if you want. I don't care. People are calling themselves whatever they want these days, aren't they? You can come out as binary, non-binary, man, woman, furry, parallel. I don't know. There's something like 400 different sexes now, isn't there? Much easier when the market was binary, as far as I'm concerned. But anyway, I don't get how it all works. I'm getting too old. I can't be bothered to even think about it. Right, that's me done for the day. So I'm going to get on with the ORB stuff. Breaks today. We've got the DAX short. So DAX is breaking short, target 125 ADR. FTSE short. Oh, you're having a laugh. Look at that for a target miss. There's my TP. There is the blow of the day. We've gone into a massive consolidation. So hopefully it's going to come and double bottom and take out any liquidity it finds down there. So I will be hopefully getting this trade short on the FTSE. So FTSE will pay for the DAX this morning. Canadian dollar news at 12:30. So markets, obviously it's Friday. It's a bit dicey markets on a Friday, but we'll see what happens. Just the one trade there, stopped out unfortunately on that one. Annoying, but and a loss there. So small loss so far this morning there. Nice profit on my breakout strategy at the moment today, which is good. This is killing it, this strategy as well. This is what I've been using as a scalping system to get some of the losses back for this month from the position trading account. This is one of the strategies I want to work on, which is why I kind of want to take a week off, because I want to spend, I'd like to spend a week solidly working on that and get that really fine-tuned. But the way I've got it at the moment, it's killing it. And again, we're talking about correlation this morning. So this strategy is running on all 4 indices, oil and gold for a commodity. It's using a yen pair, Canadian commodity again, euro, US dollar, liquid, euro and US, Aussie dollar, Swiss, safe haven. Yeah, so it's trading the Swiss, the yen, commodities, indices, and major FX. US dollar, basically. That's the US dollar index in inverse. So if you trade the Dixie US dollar index, the euro US dollar is 100% negatively correlated to the Dixie, because the Dixie is basically the euro US in disguise. So this is basically trading the Dixie dollar index, which is the dollar futures market. So again, there you go, portfolio correlation, steering clear of stuff that's going to move together. So if something's going to explode today, I'm getting on it as a breakout. That's basically what that account is doing. It's just waiting for volatility and volume to arrive, and then using that volume for a breakout, and then waiting for stuff to wake up. So again, inverse correlation. When the euro US dollar goes down, gold will also go down most of the time. So when the Dixie takes off in one direction or another, I get two instruments which suddenly make money, because I've got some correlation in there which is profitable but not over correlated. Again, what we talked about this morning. Right, there we go, all done. Anything else anybody's got to look at, let me know. I think you probably would have said by now. Yeah, I'll let you know what I'm doing next week. I'd really like to take a week off and get a load of stuff done. So I'm going to have a think about that over the weekend. If I'm back on Monday, I'm back on Monday. I might do Monday actually and go, this is Monday, let's have a look at the week, what's coming up, and then maybe have the rest of the week off or something, but I'll have a think about it. I'll get ORB done hopefully today. All right, so anything else you need, let me know. I'll be in Discord or Telegram, and I'm back Monday probably. And good luck this afternoon with the CAD. If you've got any CAD exposure on, just be aware. Obviously, we've got some movement coming this afternoon, but at the moment, nothing particularly exciting. All right, so have a good one, have a good weekend, and I'll be in Discord if you need me. See you next time.